Today, Tesla dumps most of its Bitcoin holdings, blockchain.com cuts a quarter of its workforce, and Ganesh Swami of Covalent discusses how rising interest rates and inflation will affect crypto prices. Welcome to CNBC's Crypto World. I'm Kate Rooney. Digital asset prices are taking a hit today after the European Central Bank raised rates and Tesla sold most of its Bitcoin holdings. More on that in a moment. But by noon Eastern, Bitcoin fell to around $22,000. Ether traded at $1,500 and Solana was worth about $41. Okay, let's talk about those top stories. First, Tesla dumped the majority of its Bitcoin holdings. In the second quarter earnings report, the electric car maker said it converted 75% of its holdings to fiat currency. That's a pretty big reversal from when it bought $1.5 billion worth back in 2021, claiming Bitcoin had long-term potential. Still, in the earnings call, Elon Musk said the move shouldn't be taken as, quote, a verdict on Bitcoin, and that the company was growing its pool of cash as it waits for COVID lockdowns in China to lift. Next, crypto exchange blockchain.com is cutting jobs by 25%. The company said it was dealing with both the recent bear market and a $270 million loss stemming from the collapse of Three Arrows Capital. Of course, we've told you here about a slew of layoffs in crypto in recent weeks as companies dramatically scale back to weather the crypto winter. Finally, the first insider trading case involving cryptocurrencies coming out of the Southern District of New York. A former Coinbase employee allegedly tipped his brother and a friend off about cryptocurrencies that were about to be listed on Coinbase's exchange. Historically, tokens getting listed on Coinbase have seen a pop the day of. It's been seen really as a sign of legitimacy and boosted prices. In this case, the former product manager at Coinbase is being charged with wire fraud conspiracy and wire fraud in connection with a scheme to commit insider trading. They say he illegally used confidential Coinbase information about which assets were going to be listed. Two of the men were arrested in Seattle. This morning, one person was charged but remains at large. The U.S. attorney in a statement saying today's charges are a further reminder that Web3 is not a law-free zone. Our message with these charges is clear, he says. Fraud is fraud, whether it occurs on the blockchain or on Wall Street. The news comes a month after the first ever insider trading case involving NFTs from the same district in New York. It is the first case of insider trading involving cryptocurrencies. Coinbase telling CNBC in a statement this morning that they're cooperating with law enforcement and had launched their own internal investigation into the matter. They say they identified 3 suspects, a Coinbase employee who they believe had violated the global digital asset trading policy, and 2 individuals not employed by Coinbase who they believe he was working with. Once they say they collected sufficient evidence to be confident in those suspicions, they provided information about the individuals to the DOJ and terminated that employee. All right, for our main story of the day, we're turning back to crypto markets. I spoke with Ganesh Swami about the dip in prices after the European Central Bank raised interest rates for the first time in over a decade. We also discussed how inflation continues to weigh on digital assets and crypto businesses. Okay, well, Ganesh, I want to start with your reaction to the news that Tesla sold most of its Bitcoin holdings. The company had touted really the long-term potential of the cryptocurrency, but is now selling. What does that mean for Bitcoin? What do you think we could see happen with other big companies holding crypto following what Tesla's doing?
So I think it's a bearish sign for Bitcoin's prices. So it's companies trying to sell off these assets on their balance sheet with the rising inflation cost, the energy prices going up. My outlook is it's bearish for Bitcoin prices.
Is there anything that could change that reality in your mind? I know impairment charges have been a big reason why it's pretty difficult to hold Bitcoin on your balance sheet. The accounting side is pretty tough. If they were to improve that in any way, would that be a way for companies to get in? Or do you think people are looking at this as just too volatile at a time when they might need the cash instead?
So the Bitcoin prices is just market clearing price. So it's supply and demand. And the demand comes from consumers trying to hold on to Bitcoin as an alternate asset class. And now with the interest rates going up, what consumers and businesses are trying to figure out is if Bitcoin is the store of value, or if they can buy treasuries or other kinds of assets that are more compelling. So that's on the demand side. On the supply side, these mining companies that are producing Bitcoin, they're businesses. And so they have costs. And if the the prices of energy, the prices of labor goes up, then the cost of production goes up, and therefore they produce less of Bitcoin. So it's not clear what would happen with the Fed tightening up the bolts with increasing interest rates, but we have to see. It's just the clearing price here.
So while Tesla is selling their holdings, a new report from JP Morgan says retail demand for crypto is actually improving. They point to the Ethereum merge as one of those big catalysts. Do you agree with that? Are you seeing retail sentiment and demand improving? And if so, what's driving that?
So I think the retail is looking for any kind of positive news because over the past couple of weeks, it's just been bad news after bad news after bad news with all of the liquidations and all of these lenders going under. And the Ethereum merge is definitely one of the biggest bullish sentiments out there in the crypto scene over the past quarters. And I personally, as a Ethereum fan, I'm a huge believer in, and this is going to be quite transformative for the crypto scene, because every major crypto coin out there, besides Ethereum and Bitcoin, has already moved to proof of stake, and Ethereum is this last thing that is now making that transition. And I think there's definitely a lot of excitement around it.
So some other news today, we got the ECB raising interest rates for the first time in a decade. They're no longer in negative territory. The central bank could keep hiking rates to curb inflation. Crypto in general is very much a global asset class, not just affected by the ECB, but potential continued rate hikes and any harsher monetary policy there or in the US could be a headwind for crypto. How are you thinking about global interest rates and the effect on crypto markets?
As someone who's lived through the 2008 recession, I think all of us have been spoiled with this low interest rates. And what has happened is cash has been plentiful, and it's just been a decade-long bull market. And now with COVID and the money being printed and people having other alternatives to work, inflation has been rampant, and the Fed is trying to get control of it. It remains to be seen if it can control it or not. But I think it's a very positive sign that the Feds are getting ahead of the problem. And I personally know that the coffees and the lattes that I used to get have gone up, have prices have crept up, and I know wages haven't kept up with the inflation rates. So it's definitely a tough environment out there. But overall, I think it's a positive sentiment that everyone is aware of the problem. I think that's the first step towards addressing the problem, which is recognition that there is an issue and that needs to be addressed.
Another issue people are talking about a lot, you mentioned the higher coffee prices, but inflation prices for just about everything are going up. What do you think that means for Bitcoin miners and crypto miners in general? Could they be at risk if there's rising operational costs? And what would that mean as far as pressure on Bitcoin?
Inflation has come down to the rising energy costs, right, and transportation and food costs. And Bitcoin miners are businesses, and so they have their own profit and loss statements. And so now the cost of production of Bitcoin, which is their produce essentially, has gone up, which means their margins are shrinking, which means that now they're trying to either understand if this continues to be a profitable market to be in, or should they pivot that to mining something else, another currency, or using it for render farms or other kinds of use cases.
And selling pressure on Bitcoin as a result, we've seen some of the big miners offload some of their holdings. Is that a continued pressure on Bitcoin, or do you think some of the selling is over?
I think, the sellers will get exhausted at some point, right? The negative news has to stop. We as societies are optimistic. That is my belief. And, if there's a continued stream of bad news, at some point, people just start to tune out, and they're looking for that inkling of positive light that's on the horizon. So I think my personal opinion, of course, this is not financial advice, is that the sellers are exhausted. The people who have sold Bitcoin have already sold. Now it's only the stronghold, the people who truly believe in Bitcoin that remain. And this is a positive news for the price of Bitcoin.
Okay, that's all for Crypto World today, but we'll be back again tomorrow with a lot more. We'll see you then.